All right, Steve, thank you very much. So should investors be worried about unintended consequences from tariffs? Joining us is Jack Ablin, Chief Investment Officer at Crescent Wealth Advisors, and Rachael Aiken, Portfolio Manager at Rockland Trust. Welcome to both of you. Rachael, what do you think? Is the biggest worry right now trade and tariff possibilities?
So definitely trade has been on the headlines. But when we look at the market's reaction recently, we find that, in fact, it's been relatively complacent up to this point. I think in many cases, investors were looking for the rhetoric to become reality and for us to be able to quantify what that impact would be to corporate earnings and consumer confidence and business confidence as well. Just a piece this weekend that was in Barron's stated that we saw the impact possibly double-digit declines in EPS in the industrial area, energy area, and even consumer discretionaries. Again, once we can start to quantify that, we can make business decisions.
And in this morning's Wall Street Journal, Jack, an article talking about the possibility that corporate profits for this cycle have peaked as the forecasts going into 2019 seem to be coming down. Corporate profits that might well be affected if some of these more draconian tariffs take place.
That's it. I mean, you know, a lot of bulls are latched on to this PE to forward earnings, and the argument, the counter argument is, well, forward earnings could be peak earnings, and that first quarter of 2019 could be as good as it gets. I think getting back to the tariff issue, what I worry about is the political landscape. While, you know, perhaps President Trump is looking at this as short-term pain for long-term gain, we have to keep in mind that, you know, China cheating and intellectual property and all that is something that both Democrats and Republicans can rally around. So perhaps it's possible that they're willing to look past some near-term problems to get China back in line longer term. And of course, for someone navigating the markets, you know, that's problematic in 2018 and 2019.
So Rachel, when you start thinking about how unquantifiable right now tariffs are to earnings, we got a couple weeks because the first round of tariffs are going to go into effect on July 6th. So the clock is running out in terms of how to factor that in. When you take a look at multiples, it seems to me that the risk would be to the downside, that it could only be bad. It wouldn't spur additional growth or spur additional spending to have tariffs in place. So how do you think about where we are right now in terms of valuation and what it should be if the tariffs go into effect in just a couple weeks' time?
Yeah, there definitely is not a positive upside that we see with the actual implementation. At Rockland Trust, we're looking at adding high-quality companies with sizable free cash flow to be able to insulate or provide protection in economic and geopolitical uncertainties.
Such as?
Yeah, go ahead. Name some names. Rachel?
Names that we like in the portfolio.
Yeah, you have one that's going to add some spice to your portfolio, right?
Absolutely. The name that you're referencing, Tyler, is in the consumer staples area with McCormick. It's a name that we like when you think about the changing palette in America and globally. McCormick is there on the forefront with a list of sizable portfolio names that we all recognize. Recently an acquisition, they've acquired the brand's French's, as well as Frank's Red Hot.
That's the one. Really, it's Frank's hot sauce, man. That is.
That's the spice.
My son keeps them in business. It's good stuff.
Yes, my daughter as well.
Well, good.
And again,
oh, how old is she?
20 going on 35.
Oh, she's a little too old for my 12-year-old. So, Jack Ablin, let me turn back to you. You like small caps, but let me throw a curveball in here. Is there any market implication that derives from the immigration dispute that is roiling Washington right now? Can you think of any?
Well, yeah, I mean, obviously the agricultural sector, a lot of manufacturing, certainly food service, hugely impacted by immigration. You know, and the fact is that we're stuck at a 2% potential growth rate. The only way we can get our growth rate up is either through innovation, which is CapEx. We sort of talk down now that we've got tariffs, and immigration, right, the labor force growth, neither of which we can rely on in the near term. So while we do think we could get a 4% growth quarter, it's sort of like beating a 2% donkey into a 4% racehorse. You can do it for maybe a quarter or two, but unless you really change the underlying structure and fundamentals, it's not going to be sustainable.
That's a graphic image. Jack, thank you very much. We appreciate it.
Thank you.
Jack Ablin, Rachel, we thank you as well.
Well, up next.